There we go. That only took half the day. How are you? Hope you're not ready to beat me with a baseball bat. Maybe just slightly. Can you find it in your heart to forgive me, please? I'm really not a bad guy, I swear. I did have an idea that we'll have a TTP event sometime over the Christmas break. Take a cruise and we won't use baseballs, but we'll use tennis balls, and you guys can get some long socks and put the tennis ball in there, and y'all can just take turns beating me with it. How's that sound? Good enough? We'll make Cedric pay for the vacation. All right. So then, my brand new PC that took, with me working on it, about 5 days to put together. And then, lo and behold, met some kid at the gas station who was singing the blues, literally with his guitar, but also uh, crying about, life in general, having to work at the gas station. I said, well, what did you do? He said, well, I used to be an IT guy for the military. I was like, well, you think you can build my computer and fix it? He goes, man, I can do that with my blindfold on and earmuffs. And I said, really? Well, I'll put that to the test then. And not only did he straighten me out, but got my network set up. See, I've got all this equipment to, make a proper network and secure it and all that. I just really am not nearly as smart as I thought I was. Big surprise. But uh, he sure is. And he got my network set up and secured, and it's nice to have a computer that works, it really is. But I did experience some issues with it, with the BIOS when adding a hard drive, a secondary backup disk, like a normal HDD, and it didn't want to start up again. And that's what really threw me for a loop. So I was just wanting to run a backup just to make sure, just in case, I had some kind of way to boot up again in case anything happened. It seems like when these things happen, they happen while I'm presenting or right before I'm presenting. So I didn't want to have to experience all that again. Oh, check this out. So this is the update you guys will be getting. See how it snaps to the size layout that you choose. So no more of this trying to resize and figure out, how big they need to be, and then make a change but not see it until after you've clicked the group button and re-clicked it. So now everything is in 100% real time. So if I make a change here globally, that change is reflected everywhere instantly. Isn't that cool? Not exactly perfect, but 100 times better than it was. So that's pretty neat, huh? And you will have this tonight, believe it or not. I don't really care anymore. It's been such a, well, I shouldn't say that. I do care tremendously, but it's just about wiped me out mentally. This whole endeavor, trying to get everything completely perfect before this release so that, you know, this is it. This is the final 2020 version. And, you know, we're going to add some fixes to the volume analyst. But that's it. And then, so what, here's the issue. So I've been trying to adapt these workspaces and Bloodhound templates and strategies, everything that we're doing to accommodate both day trading and swing trading. And well, I tell you, that's a very, very difficult thing to do. And yet I have tried to the best of my ability to do just that. And I think I've come very, very close to, well, let's just say it's acceptable to me, and I'm very, very hard to please. So that should tell you at least something. And not to, you know, I don't want you to misconstrue that meaning, oh, what, development is over? No. I've really only just begun. However, there we go. The thing is, the next round is going to be a 2021 version, and it's going to be much more precise in that it's going to be tailored to the two main types of traders: those who want to day trade, those who can afford to sit at the screen for, you know, extended periods of time, and then those who would much rather swing trade. So for the swing trading, we'll have less smaller time frames, just a couple of fewer smaller time frames, and we'll have more operative time frames for the higher charts. So we'll not just have the 138, but we'll have a 276 or 240, whatever, and then also have one for the daily chart, so that, you know, you can have, at that point, by that time, you'll be able to run this on potentially 500 workspaces, 500 charts. So if you wanted to watch the S&P 500 or, you know, all of the Forex markets. And that's another thing. I've tried to adapt this to work with both futures and Forex and stocks. And there is no one size fits all. So each has to be tweaked individually. And I'm trying, you know, I'm going through the signals. It's, let me put it to you this way. When you're looking at the signals historically, those are not the signals that you'll see in real time. This is a real time system. So let me just give you an example of what I'm talking about. It's a little louder than I expected from you, mister. It's nice that it only revs up for a second. I tell you, the radiator on this thing is bigger than half of the case. It's incredible. It's totally silent until I flip a workspace while Zoom is on. So let's go over a couple of examples here. So all of the signals that you're actually going to be thinking about taking will be on the row 1 and the row 2. And in doing this, since I've had this computer actually working properly, I'm thinking that 3 row charts is too much. What I'm going to do is over the next hours eliminate that row BB chart because it is the one that provides the most faulty signal. So it appears to me through much testing that the faster the chart, the more random the signals, the more random the volume signals especially. And there's really no need to have this last Blackbird chart. I made it this way so that it would be just abundantly clear that, hey, this is the chart that you put Blackbird on. But rather than doing that, I'm thinking that we're just going to add the Blackbird strategy to the row 1, because the row 1 has the same number of days as this chart, and I'm going to kind of lower the size of the row 1 slightly, not nearly as fast as the Blackbird chart. And then I think that's going to be plenty. And then for crude, I'll add the 1 minute RTH, which I've already done actually, but I've also added the operative time frame Bloodhound templates for the 138 minute chart. So it does indeed work for both day trading and swing trading. But the issue with using Bloodhound and Blackbird is you don't necessarily know that, which trade is classified as a day trade or a swing trade by the colors of the stripes. The only way that you know that is by which chart that it's on, which chart the signal is on, whether that's the row 1 or the row 2. Row 1 being the signals from the 2 minute, 1 minute, 5 minute, and the 10 minute. So that's where the 2 overlap, right? You can have the 10 minute as the operative time frame and still get the signal from the row 1 for the confirmation in the divergence in the volume. And then you can have the same occur on the row 2 from the 10 minute, such that, if you wanted to eliminate, say, the row 1 and just use the higher time frame, you would still be able to get signals from that 10 minute chart. All right, let me just give you a moment to process that. I don't know if that makes a ton of sense without the PDF guide to go with it, but so let me just break down briefly. I think we're actually about to have a short signal here, and this would be perfect if we did. This will give me a prime example of exactly what it is that I mean. This is going to show up on both the 10 minute and the 5 minute. So actually, let me kill some of these workspaces briefly. I am recording, huh? Yep. I'm going to kill the 6E briefly. I think that's good. All right. Okay. You see, you got the import manager here now you can open up. I'm not going to go into all the details of that. That's got to be a separate video that you can refer to. But so if I'm looking for a short, and I'd say that I very likely am, I'm expecting, first of all, my main downsloping target for the short, and then the upsloping target, which is going to be top of this channel. Now this is where it gets a little dicey here. Do you use that low of the 5-minute bar, or do you use the lowest closing price? If I use the lowest closing price, I'd say we're sitting on top of that one now. Yeah, that's no good. So I could use the lowest price there, but that's not it. This is the price. That high or low. Although it is just the low of the next 5-minute candle, that's the one I'm looking for. So I want to see it come up into right there in the next 10 or 15 minutes. And I want to explain to you why this will show up on both. If it does show up, why it would show up on both the row 1 and the row 2. It's even going to show up on the 5-minute, but in order to get a signal that could occur on both the row 1 and the row 2, it has to be from the 10-minute chart, which is the min 3. And I want to explain that to you briefly. We're gonna go over all of this in detail for the next 5 days. 5 days straight. And if you didn't get that link, I sent out an email a moment ago. This is that link for tomorrow, starting at 9 a.m. Central Time and going to about 10:45. So about an hour and 45 minutes. And you can pass that out to whomever you please. You can post it all over Facebook. In fact, I'd rather you post it all over Facebook. Just post it everywhere. Send it to everybody you know, even little old ladies. Just kidding. We don't want them to lose money now. Don't do that. But if they're into trading and they're following somebody else, you better send it to them. Lord knows we don't need them losing money based on garbage. Yeah, look at that. See that? This was a difficult one on Friday. So, oh, well, would you look at that? This is another thing that's really thrown me for a loop. I'm used to NVIDIA. And AMD has pretty much everything that I need to do live streaming, whatever, built into their graphics card. It's quite incredible what I have access to here. And evidently I have hotkeys enabled that are interfering with my main hotkeys. Let's just turn this off then. Can I? Yep. Whew. Got scared there for a second. Okay. Has the webinar occurring every 5 days? Uh-oh. Whew. Really? Well, I did make it under duress, so it's a very, very strong possibility. Let's see. Edit this webinar. All webinars. Every 5 days. Yeah, daily repeat. Every 1 day. Recurring every day until September 27th. September 25th, actually. There we go. Yep. Thanks, man. I got it. I just fixed it. There we go. Good deal. It should send you an email right now. Let's see, did the link change at all? I don't think it did, but let's just double check. Can't hurt. So yeah, send it to whomever you like. No, I'd have Blackbird on just the row 1, Tony. So I'm thinking I'm going to do that, but you know, in hearing myself say that, I just hear more and more and more work stacking up. How about I just get the update out to you tonight as is, and then we'll go from there, because this is really just obscenely delayed and late, and you know, it's not for a lack of effort, it's for a lack of ability to use technology efficiently. Maybe I'm just getting old. Sorry, that's not a dig. I'm just thinking, you know, the old brain doesn't work like it used to. That's not entirely true. It's just that me and technology, we sometimes don't get along, and computers evidently don't fly very well. They're not meant to fly. They look pretty in midair, though. But anyway. I'm just seeing if we got anything else lining up here. Yeah, this is, we were thinking almost go short there into the close. Glad I didn't. Well, a buddy of mine was thinking about it. That's the one. That's the one that's lining up. So we want to see it pop right into there, which I'm pretty sure we'll see happen before I'm done. And look at the volume that's picking up. That's to the downside, huh? Majority. Although it is for, no, I can't say that. The majority is to the upside, in fact. All right, let me explain what that number means. So if I turn on, I want to use this time to kind of bring you up to speed without the benefit of having, you know, multiple PDF guides for you to look at and sort through at the same time. That would be lovely, but that's not the case today. Now, it will be the case by the end of the week. Now, show me the close. You can barely see it. Let me make this just a little bit lighter, and then just finally fix their colors. Okay, that's the close here, huh? So this 266, that means that from the reopen at 5 p.m. today, from the reopen, it is 2.6 times more volume trading than we would usually see during this time of day. And that's incredibly significant. Anything over 140 is significant. So what would that mean? That would mean that you could safely expect, with a degree of, 0.55 probability, maybe a bit more in this case, that you're going to have roughly 2 times more volatile movement in the markets than you had over the past 6 days on average, 6 trading days on average. I think it's 6. It might be 7. Just double checking here. 6, yeah. And that could be to the upside because the majority of this volume is to the upside, although you see it dropping off here. So it's kind of fizzling out. I want to see it pop right into this area. And then we'll have our retracement. Now I'm going to be a nervous wreck trying to short that because I have quite a bit of volume against me. Now it's not actual volume, it's not the true number of traded contracts that are against me, but who do you think is the majority makeup of this overnight volume? It's not people like me and you. It's people, in my estimation, and according to some people that portray themselves as having this insider information, it is those private individuals who work at firms and funds that make up the big institutions because they have a little, they know already to some extent what it is that they are trying to achieve this coming week. And that may be, tens of thousands of orders in buying certain S&P stocks or whatever. And this is their way of trading that without getting in trouble, probably through secondary accounts in, grandma's name or some other whatever name, who knows. But that's just an estimated guess, I could say, based on other people's intel, at best. Just a theory. It's not even something I can hypothesize about. Not that science is very meaningful anymore, but it used to have its benefits. Now it's being misused. Put your masks on. All right, whatever. I just thought we had a constitution. What do I know? All right, so let's see. I got to do this on the next size chart up. All right, so what I want to get into is the differences between the row 1 and the row 2. Okay. Again, this is all based on trying to adapt workspaces that are seemingly incredibly complex just by the sheer number of charts that they have, when in fact they're built as such to accommodate 2 styles of trading, which thereby does make it a bit more complex, doesn't it? So wouldn't it be nice if you were a day trader and day trader only and didn't have to worry about all of these higher time frames that Daniel forces you to use? So next year, that's what we're going to be focusing on, building out specific, very, very dialed in um, workspaces, indicator strategies for very particular styles of trading. And we're going to get it pretty well dialed in as best as humanly possible. And those are the things that I really, really love doing. And I was about to say excel at, but those are the things that I like doing best, and therefore the work that comes out of that tends to be better than otherwise. So, in my estimation, let me just go ahead and export this actually. It's been a while since you guys have seen an export from old Danny Boy here. There is a reason, but there's no excuse. I think once you see the platform that we're about to have and just how cool it really is, it's just, you'll know exactly what's going on anytime you open it up. You'll know exactly what it is I'm working on, when the next meeting is, when any sort of event is occurring. You'll be able to watch it from that app. And then maybe before too long, that app will become the forum and everything will be in one place. It's actually quite incredible. And then I can stream from within that app. So that's about all I want to share with you about that today, because it's tried to make it happen for today, and it was let's say time that should have been spent doing more important things like getting the installers out. But I wanted to kind of have everything all at once, as per usual. And when I get into that mode, it's like, I get about 60% of all of it done, but 100% of nothing. And 100% of just one of those things would have been better than the state I'm in right now, right? Assuredly. But yeah, this was such a sweet high. It just didn't. I thought I killed you. 1 second. Let me just make sure this thing is dead. Radeon. Can't get any of these things that just permanently turn off. MSI, True Color, Server Central. What's this guy? I feel like I'm going to mess up doing this. Nope. Okay, good. So this is the Ryzen 3900 XT on an MSI X570 Prestige Creation motherboard, which is really much more than I needed, but it's about all I could get. All right, let's see if that worked. Desktop recording, please enable recording. This is so ridiculous. Come on. Just thinking for a second. Just bear with me for one moment, because what I'm going to go over is going to be pretty key. Radeon. Oh, I know the name of that thing. Okay. That's right, Ava. It's the cumulated average of all of the relative volume traded to that point. So that's it's that average that runs like a VWAP. It's accumulated average. So it builds, the period builds with each new bar. Cumulative is a bit different. That's like cumulative delta. Cumulated average is like a VWAP. I don't know what this bonjour thing. It's French, so it's got to be terrible. Just kidding. Sort of. And this is a PC that I will be installing nothing extra on other than what I've got now. This is what it is right here. I don't need any Mystic lights. I don't need a desktop overlay. I think that did it. Just making sure it's not coming back. All right, I think we're going to be in business now. Let's search. I forgot to turn that off. Usually takes me about an hour to get going for an hour presentation. In this case, it took what, 3, 4? No more. So I was watching Bo looking at this and thinking, that last set of waves up is awfully ending diagonal-ish looking. And just making sure we got enough time to go over this. Yeah, let's say we do. So, I'm looking at that. I was thinking Bo had caught this high. He had it marked up. It was just pretty fast into it and down from it. Pretty sure Rerd caught it in there. What Bo caught was this high here down. I think he got, I don't know, 3.5 to 1 or something. I didn't actually ride it all the way down, but when I was looking at this high, I was thinking, it could be that wave 1 high, or sorry, wave 1 low is this low, and that this is a A, B, C, maybe you get a triangle X out of it, or that's just the X. And then you've got an A, B, C for 1, A, B, C down for 2, A, B, C up for 3, 4, 5, ending diagonal. Because just look at the way it kind of, I was going to say coalesced, but I mean, it gave that range bound wedgish looking pattern. And normally I'd be waiting for the same exact thing that he was, a break of that high. But when the average range goes down, and that's another thing that's difficult about this, it is fresh into the Euro session, so you wouldn't expect that average range would pick up. But right at about 10 after 8, 20 minutes before the open, you get that really good looking volume divergence on the 5-minute. Sorry, the 10-minute. You had it on the 5-minute as well, but right there. You've got your really beautiful volume spike here. You go back down, sign of weakness, climb back up, and you tick it out and get that beautiful fat churn bar that's actually higher relative volume than the preceding 6 or 7 bars, 8 bars. And perfect volume divergence signal. It's almost triple divergence, not quite, but I think on the 5-minute it is. And then it falls off that cliff. I'm not usually one to trade trend line breaks, but after an ending diagonal that you've missed, that's really the only opportunity that you have, because they tend to move really, really quickly. I mean, the statistic goes wherever the ending diagonal began, which you would say is right there, you tend to retrace all of it in less than half the time it takes to make it. So from here to that high, it took what? 71 bars, so 11 hours and 50 minutes. Let's just say 71 bars. And you broke it in how many? You didn't break it until that one in 11 bars. That's much more, or sorry, that's much less than half. So that is, oof. So yeah, you would be expecting a very, very fast move. And in this case, let's say you started with the trend line from where the ending diagonal began. You just barely missed that kiss goodbye right there, such that if you did sell the break of it and the close of that 10-minute bar, you would have waited for the retracement back up and kiss goodbye. But what is the second best option for that? I don't know, Daniel. It's from right here to right there, and then up, kiss goodbye from that line. So I wasn't making fun of you. I was making fun of myself. In fact, it's clearly that, but it's not so obvious in real time. I would have drawn this one in real time, and I would have been a little bit leery of that had it not stopped at that 100% warning line there. And then where did it pull back to? I guarantee you that's got to be where majority of the volume of that swing resides. I would expect. Oh yeah, look at that. Isn't that just spatial? It does look good, doesn't it? So now, if that's a 10-minute chart, I would expect that this would be a setup on the 2-minute chart. Let's look at that. Are we getting closer? Not quite, but when it gets there, I want it to get there all within one 5-minute bar, and then hopefully followed by a churn bar. So I need to get my alert out. And actually, I'm going to put my alert right here. There we go. So now if I hit that, if the ES hits that, I'll get an alert giving me enough time to then pull it up and figure out whether or not I want to actually take it. And the only problem with this is, where do you start the fib from? Do you start it from right here or that higher low? I'm going to start it from the higher low. Well, naturally it's 100%, 100% because it's the top of the channel. And it's right where the top of the channel is met with the median line. Pretty close anyway, more or less. Right there. I'm just going to clean this up a little bit before I move on. So all this week is going to be training, and not trading, where I'm just rushing through and not really focused on teaching at all, but flying through the charts, looking for setups for my own trading. And well, to help you guys find areas, but I think what we're going to focus on mostly is historical charts. I know that sounds terrible and boring, but it's work that must be done, and it must be done by you all day, every day, at least an hour a day. I can remember people calling me on the phone, and me asking them, well, tell me about, your trading. What do you know? How much have you been exposed to, or how much nonsense have you been exposed to? And what do you think you know? And how much experience would you say that you've accrued over the past, whatever it is that however many years you've been trading? And I've had several people tell me, well, I've been watching the markets for 3-4 years, just trying to absorb how they move, and testing, but they weren't testing. They were just looking at various oscillators and indicators and yada, yada, yada in real time. I said, okay, did you spend any of that time whatsoever going bar by bar, marking up historical trades, or what, trying to come up with some set of rules that you could then test, even if it is manual? Well, no, I was just trying to get kind of familiar. And it's like, well, basically you wasted 4 years of your life just kind of looking at the markets. Sounds like. I didn't say that, but that's what I'm thinking. So when you're new to all this and you're expecting to make money from it immediately, or you're expecting to somehow just follow my trades and magically make money, and then I go into what is statistically going to happen at some point, which will be my maximum drawdown and my maximum number of losing trades in a row, you're going to be totally peeved, and you're going to give up, like so many before you have, because you didn't know these things that I'm going to be going over all this week. So I think it's incredibly important if nothing else, you're going to learn quite a bit that you can then take off and apply to whatever other systems and strategies you're working on. So yeah, I think it's going to be a good exercise for all of you guys, and they'll all be recorded and accessible to anyone that wants to watch them. Just seeing if we have anything else lining up there. It's already turning down, but it's turning down right into the right spot. So I'm thinking if we can just find a little support right here, right now, not go down below that lower median line, then we ought to get a pop right up into that spot. And that's going to be a potential short trade, but this is what's kind of scaring me. So yeah, that is the accumulated total relative volume from the reopen, and that is exceptionally high. I haven't seen it that high in a while, which means that something is going on. It could mean that this is a fourth wave low, the big fourth wave that I was looking at last Sunday before last. Let's not talk about last Sunday, huh? I'd rather not. Let's just give old Daniel a break on that one. I was within, well, let's just say it was a bad weekend. But all that's behind us because brand new computer. All right, now we're going to look at that 2 minute. All right, so let me duck that guy. 16 minute will go up yonder. Oh, it doesn't like it when I move stuff around. I see. I'm going to have to figure out how to add that second graphics card here. This is why I'm saying what I'm saying. That could potentially be fourth wave low. And it would have to be some sort of a double three, or it just doesn't make any sense because that is awfully triangular-ish looking. A, B, C, D, E. Oof. If that's the case, then yeah, we're going down to at least there. But this is the best place for the fourth wave low, where it's at. Just trying to make heads or tails of this. And it's all just a very, I don't know, just a rough looking set of waves. In my view, it needs one more push up. And I was expecting to have already gotten that push up. This is what scares me right in here. Big volume, big money stepping in, selling that off. The Fed and all their cohorts, or whatever you call them, are certainly involved in that. Big banking money. Maybe Mr. SORO. He's been quite active lately. That's interesting. All right, 2-minute chart. Frank, I did that, man. Check it out. Well, this is all not every. I mean, this is like brand new, totally brand spanking new. So yeah, I don't want to use that one, but I did stop this. See, but it didn't. It's not taking. Why is that? So I did have to reset the BIOS. I had to clear the CMOS after attempting to add a secondary hard disk and it not working, didn't take. And it just simply, it wouldn't start up after that. So I ended up having to clear the CMOS. And since then, things are a little bit dicey. I'm thinking I need to possibly uninstall and reinstall, but man, that's SSDs just do not like, uh, you adding and uninstalling and reinstalling programs all the time. And at least in my experience, it's kind of been the way it's worked out or not worked out with SSDs. I don't like a whole lot of change. There's someone else like that. Oh, look at that. Man, just something else, isn't it? Watch it just go right through it and make me look all crazy. Oh, there's Daniel drawing lines on his chart again. Mr. Line Drawer. Yeah. Let's compare track records. How about that? How's the quality of the picture today? It should be exceptional. No, the update's going to go out to everybody all at once, all installers all at once, because it has to. Most of the files for the individual installers are done. What I'm doing now is copying Blackbird templates to Master Suite, and that 138-minute operative time frame template and market geometry template to the toolbar workspaces. So I remade the market geometry template. I remade the row 1 and the row 2 and all of the chart templates. Settings for the volume analyst are all totally different. Look at that. Would you look at that? So that was the one that was missing for Bocephus on Friday. Right there. That's why you can't see. It's really difficult to keep all of these things in your head. That's why you need a thing you can print out on your desk. I'm gonna have to get a new document creator, document manager. The one we got, he's just not keeping up. I think his name is Daniel or something. It's just not doing it. Daniel. But look at that. That's the main one right there. So that's a 1, 2, 3, 4, 5. That's the X wave right there. Well, you could say it's the B wave in a zigzag, and this final wave up is an ending diagonal, as it is. Let me count that for you, because that's a pretty interesting pattern. And guess what? The same exact thing happened here. Didn't quite break that high. So one of the things that I always say and look for is waiting for the preceding high for a short, waiting for that preceding high to be broken before getting into it. And the main reason that I'm doing that is mostly because there is typically a ton of volume sitting beyond those swings, because that's where the majority of the public will place their stops. And anytime, well, not anytime. I mean, this is everything that we talk about is based on probabilities. Even when people say that what they do is not, quote unquote, pattern recognition, the next sentences out of their mouth describes to a T what is pattern recognition. But I'm not using pattern recognition. But I mean, that's what it is. It's what we're doing. Whether it's based on a news event, okay, maybe it's not a price action pattern. You know, maybe you're doing something at a certain period of time every single day, or whatever. But anytime price action is involved, regardless of what the person will tell you, it's all based on pattern recognition. That's the only way that you can build rules that are testable when it comes to price and volume and such. But again, there are little anomalies and news events and whatnot that you can base rules on. There's a lot of different ways you can build systems, but with what we're doing, we are indeed looking at pattern recognition. And seeing a preceding high for a short or preceding low for a long be taken out, almost invariably you see a huge spike in volume as those mostly public retail traders are getting stopped out. And that's right around the time that we're hitting a perfect area, or whatever. Well, hopefully, if it's the way that we trade that we're talking about. For me, it has to be hitting a gorgeous, beautiful area. But when you're moving in a rather strong trend, you don't always break those preceding highs or lows. And that might signify a series of 1, 2s, 1, 2, 1, 2, 1, 2. And that might be exactly what happened here. So we could be in a 1, 2, and then we're in another 1, 2 of a giant third wave down. Okay. It's just an idea I'm kicking around, but as this is the divider wave, I would say, as the majority of it occurred during the day session from high to low. That's right after the open, 9:30. And that's 45 minutes, or let's say 30 minutes before the close. So that makes up the majority of that trading day right there. And that is the dividing wave. So if I were to count this for tits and giggles, I would count it as such. Well, let's forget about all that counting madness. Nah, okay. 1, 2, 3, Maybe it's a triangle. Maybe it's not. 5. A, B. That's our C wave. And then A, B, C for 1. A, flat B, 1, 2, 3, 4, 5, C for 2. A, it's really a double 3, but A, B, C. Maybe it's a zigzag for 3. A, B, C, zigzag for 4. A, B, C for 5. Now, a lot of you guys are thinking, what is he talking about? This is just what? But I tell you, how did I put it last time, Patrick? It's not the car that I drive to get me there in my trading. It's not the vehicle, but it is the road on which I drive. Elliott wave. It paves the way. And it can do that properly for you if you apply it properly, or it can do it really horribly for you if you don't. And it's just shy of that 61.8. Man, something else. And then what? We had the same, almost the same identical thing right here on a smaller scale, which we'll do now. So this, I mean, that's what we call fractals, right? So now we're looking at a degree smaller up into this high, starting from this low here, which I'll mark right there. So now we're looking at that push up. Just like this one didn't break the preceding high. And we can get into that if we have time, but we had the same exact thing happen at the very next major short, although this was the very next major short, and Bo caught that one. Lovely. Proud of him. He's been doing a pretty good job, actually. This is that same type of movement, same exact scenario, ending diagonal C wave on a smaller scale. I would want to call that 3. Yeah. 5 is the longest wave in that case. So that is our, actually, that's probably right. I'll just leave it at that degree. It's the smallest degree that I use. It's the submicro, I think, or the micro. Submicro, yeah. So we'll say that's our A wave. I've got all those sorted out too, by the way. That was no short endeavor. Look at this. Got them all grouped together. If you use Elliott wave, you'll be quite happy when you see this? If you don't, it's totally meaningless to you. But it was no small feat, I assure you. BC. Oh, are we there? Oh my gosh. What do I do? What do I do? Oh my gosh. Paralyzed. Oh, it's moving. It's moving. Well, yeah. Better do it if you're gonna do it. I want to do it in Blackbird right now, but well, it's not happening. Okay, so it's you see the signal. This is the operative time frame, right? OTF is operative time frame. There it is. That's exactly what I said I wanted to see. Extremely high density. Now I want to see a churn bar following it immediately. Dang it. Oh, it is already a 2-bar pattern on the 2-minute. Okay. Come on, baby. What is going on all of a sudden? Hey, Charlie. Hey, buddy. Kind of busy, but never too busy for you, Charles. Good boy. Oof, look at that. I should be getting short one right now. All right, so it's even showing up on the 2-minute exceptionally. And that's what I want to get into. How can it show up on the 2-minute, the 5-minute, and the 10-minute? How is that possible? How is that allowed? I should be short right now, but I'm not doing it. Because I'm going to teach about it instead. So there is our signal in the market geometry. Oof, as we had right there. So this is chart number 1. Well, I'd say chart number 1 is the operative time frame. What is it? Well, it's actually 2-minute, 5-minute, and 10-minute, which is a rarity. Okay, enough of this. What's going on? I think my little gaming keypad has had one too many drops on the head. Kind of like me as a small child. I can't believe it. All right, let's figure that out. There's your churn bar. Okay, this thing is looking all kind of weird. I forgot about all this garbage on here. Ah, there you are. You Trader 8, Toolbar Pro 8. What? I'm hoping those are one and the same. Yeah, see, they give you all this garbage with every single gaming mouse that you can find. This one is pretty much outdated. No, I'm not scanning for new games, man. I just canceled all that. Oh, yeah. Yeah, I just canceled it all and it started doing it anyway. Telling you, I'm going to have to reinstall. Yep. I'm going to have to reinstall all these apps. Since having to reset the CMOS. The CMOS. Listen to me sounding all fancy. No, I just reset my CMOS today. What'd you do? I mean, that's about as good as it gets right there. Um, why would you not take it? Why would you not take it? For one thing, that is a very particular pattern here. It's not, I'd say that's more of a V bottom. And for me, a V bottom, it doesn't have to go straight back up. It just has to do a V as such. And then it can come back, and that's the low that I'm always looking for after a V bottom, preferably from that lower median line to the tick. Interesting. It's funny stuff, this market geometry, I tell you. All right, so why might I not take it? Because of this, the fact that on the higher time frames, you have what looks like this on the hourly, namely right here. Big volume divergence. It's a new contract. A lot of people are thinking, you know, this move is exceptional. It's, you know, all fake money. It's true. And it's got to come down. It's got to come way down. Well, in my estimation, all it needed to do was break that low. Okay. Didn't have to do any more than that. Really, I started off saying that low because I thought that was a triangle, but it wasn't this low. So I wanted to see that low be broken. If it is going to come lower, then I want to see it come back into these lows. And then we would have a proper, it could still be a fourth wave, but at that point I'd be thinking wave 2 of 5 for a really big extended fifth wave up. See how that's 261.8 at the high. That's the main reason I'm thinking 1, 2, 3, 4, and then 5. So do I really want to short into that? Well, the fact is, normally when it hits the 161.8 as the end of wave 3, not necessarily 261.8, you'll retrace back to the 100% as long as that 100% of wave 1 from the end of wave 2, this is an extension, does not go inside of the wave 1, which it does not. However, that is a 61.8 retracement of wave 3. Currently, we've made a 50% retracement of wave 3. And each time we get down in this price area, it V-bottoms right back up. Sorry, it creates the low, and then it pushes straight up out of it in a V-bottom each time. And I'm leery of this, thinking that it may just do the same because it's now also touched this high, right? And then we've slightly overthrown that low, that channel. So that is an acceptable throw over of a channel to still be valid. And this gets me every time when it's a big channel on a big chart, pulling back into that now kiss goodbye. That's also a reason for the short, but you're shorting back into all of this, momentum divergence, volume divergence. Momentum divergence is not nearly as important to me in this case because it's just ever so slight. That volume divergence is actually quite meaningful, especially with the size of that wick pushing up and out of that area on the ES. That perfect 50% retracement, top of that high. It's a pretty good spot for a major low. I mean, really. It's just a very awkward looking pattern, isn't it? It's quite awkward indeed. Let me just check something out real quick. Could that not be a running triangle high right here? Could that not be a Yeah, it can actually. C, D, E. That would not be my preferred count. But yeah, that's a valid count. And then what do you have? What do you have? If that's what the count is, what do you have? What would this complete for wave 4? ABC down for W, triangle X wave, which is typical. Well, typical is, either straight line or totally sideways. And this is totally sideways. And then another ABC for the Y wave of wave 4. So if I had to label that as a completed fourth wave, that's how I would do it right there. That's quite lovely, in fact. Interesting stuff, huh? Not really, Dan. But if it is, my short is kaput already. I really wanted to get into that while I'm talking to you, but um, I don't want to. I'm not going to do it. I'm not going to do it. No. Look at that. What did I say on the 5 minute? Big climax, and then I want to see it followed by a churn bar. What does that give us? 2 bar pattern. Hmm. Didn't go as high as I wanted it to go, though. I mean, that's for all intents and purposes. That's pretty much a hit. Man, I'll tell you what. If it comes back and it hits right here, then I'll do it. But the whole goal of this exercise is to go over why it is you can get a signal on the row 1 and the row 2 from multiple charts. So that's the signal from the row 1. I don't guarantee it, but I'm pretty sure, yeah, there's the signal from the row 2. All right. You can forget about all of these historical signals. They would not look like that in real time. Why? Because this is a real-time system, and at any point intra-bar, those volume signals can change. They can change from being a big, beautiful churn bar, and then all of a sudden it just grows in range by just a few ticks, and then it's uh, a normal climax bar that's high density or something, which would change the dynamic of the rules necessary or required to print these signals here, these stripes. And just to give you an idea as to the amount of work that actually is and why these things happen to take longer than I expect, is because I'm modifying each and every one of these and changing the values of the weightings. I mean, imagine, first of all, coming up with that. Second of all, tweaking it to make it better. Third of all, tweaking it to make it better for both day trading and swing trading. Fourth of all, to make it work with all instruments, stocks, Forex, and futures. Why would I even attempt that? To make you guys happy. Of course. In the process, I think all I've done is pissed everyone off. But in the end, it'll be worth it. It's just, you know, not the way that I would have wanted it to go down, but, you know, for some reason I must make it better before I send it out another time. It's kind of the way it's supposed to go, isn't it? The software, I mean, is, hands down way better. That's why I'm saying this is the last update. Even though we will, any bug fixes for sure. Now, the way that we're doing this, the updates to the software will never be dependent ever, ever, ever again on me and my templates and workspaces and Bloodhound signals and all of that. Software is now 100% totally independent of my work, which it's all my work, but you know what I'm saying. If there are bug fixes or, little tweaks that we're adding here and there, those can go out immediately and you can run that, and you're not going to have to worry about it. You're not going to have to worry about, updating the workspaces or whatever. It's all going to be totally independent of and separate from the workspaces and templates, the DLLs I'm saying. So at any point, whenever there's an update that's ready for the software, you'll have it immediately. And at some stage, this Ninja Manager that I love so very much will be showing you when an update is available, if you'll use it. But that'll give you incentive to use it as well. And then you'll click on Update Now. It'll shut Ninja down, grab the DLLs from our server, install them for you. No more necessary custom installations, or, we'll cross that bridge when we come to it. But that's the end goal. 100% total ease of use, best customer experience of all time. I feel like I want to short this, but you've even got a churn bar on the 10-minute chart that looks like that. That is insane. It's a short. Yeah. Time is at 8:44. You guys got to go. I want to go over some more stuff, but I got to get a drink of water. What time is it? 8:44? 8:50? All right, let's do this. Let's take a bio break, 5 minutes. And then when we come back, I'm gonna go through crude oil. But I'm going to first finish my talk about the row 1 and row 2. Okay. Huh. 276 minutes. Interesting. All right, let's take 5, huh? I'll be right back. I feel like I'm missing such a good one. If this goes into a third wave down, I'm gonna feel well, at least I pointed it out, but I may have thrown a wrench in that whole thing for you, talking about this. And now you second guess it, but that's kind of the name of the game. You want to have rules, but you don't want, believe me, you don't want a fully mechanized 100% mechanical system. They don't test well. That's not true. Everybody wants one. I want one. You just don't want to use one to trade with and think that you're going to make money with it, because it's probably not going to happen. So therefore, what? You must focus on becoming the best trader that you can be. You have to stick to your rules, but at the end of the day, you also have to make a decision as to whether you're going to take the trade or not. And that decision becomes, in some respect, a bit of market intuition. And the only way that I've been able to develop that is through the use of wave patterns and building a bias, not a bias that can't be broken, but a bias that I know exactly at what point it would be necessary to change. Does that make sense? You have to build a bias, because if you expect to be able to hold a trade long enough to actually make 10 to 1, an R multiple of 10, and hold it to the target and know when to hold it to the target and know when to not, whew, it's a lot of screen time and practice. Everybody wants a fully automated system. I know. I do too. But to develop that, you first have to develop yourself. I mean, every automated system has as its precursor a trader that knows what he's doing, right? So let's focus on building that. Let's focus on building your core uh, your core tradability, your core intellect and adeptitude. How do you say that? What's the word I'm looking for there? You know what I mean? We want to make you the best discretionary trader that you can possibly be. Once we've done that, then you can think about, you know, quote unquote, working on an automated system. Just put automation out of your mind until we've put into place some of these things that we can use to test your ability so that you can watch yourself get better. And then you can think about, okay, well, how could I automate some of these processes, which is what I'm trying to do myself in the back end of our business. What are some of the ways that I can more efficiently do the things that I'm doing? That's a discussion that we can have once you're at a certain point. You've learned all the ins and outs of the methodology. You've watched yourself improve. You're making great strides. Aptitude. Thank you very much. What did I say? Adeptitude? Goodness gracious. It's from the French. They boggle the mind, I tell you. Or as Katie says, they bottle your mind. Put it in a bottle. I'm just kidding. All right, I'll be back in 5 minutes. All right, sorry guys. Katie had to ask me a few things. Where are we here? Let me make sure I export all of the above. And yes, he missed it, but he didn't miss it. Well, that's pretty much a miss. Found it, didn't take it, showed it. Yep. Well, if I had that one more tick. You see the importance of using the higher low though, huh? When you've got a wick like that. In fact, let's see. Maybe that one would have been better, actually, the real higher low. But the main area that we had here was what? It was this one. And did we hit that? We were within half a tick from it. So I'd say that's a hit. Now this is where it's going to make it or break it time right here. So that's the first spot at which it can fail. Will it fail? I don't think it will. I think it's going to keep on going. All right, so let me let me finish my thoughts on why it is that we can have a trade set up on 3 different charts as the operative time frame. So in the day trading aspect of all of this, we have as small as a 1-minute chart, this RTH1. And on the one that I have on my workspace, which I can't send it out this way. And this is an RTH chart, by the way. It is still recording, right? Yeah. I have the tick index. Okay, so this is the fastest chart on which you can get a long or a short setup. And I made it this way because there are a lot of people that will take these smaller trades. The ones that you're seeing here for the long, to the long side, as it's coming down, these are not long signals per se. These are showing you the bars during which time, if there were confirmation from the market geometry together with the confirmation from the volume and the divergence. Okay, those are the Bloodhound templates on the row 1 and the row 2, the volume and the momentum. And the market geometry is on the tick 1 chart. If you get all of those, all 3, operative time frame on this chart, from this chart, market geometry from the tick 1, and then the confirmation from either the row 1 or the row 2, and in this case it would have to be the row 1, because that is the chart on which I have the lower time frame signals. And when I say lower time frame, I mean all the way up from the 1 minute to the 10 minute. It might do to just simply eliminate the 10 minute from that chart, but there are some beautiful signals that you'll miss that you could still classify as intraday trades for sure that will occur on the 10 minute. So I'm doing it this way so that some of these smaller signals will still get found. The problem with that is I'm looking for 2 types of signals. And one type is the typical higher low or lower high type setup. And that's what this would be right in here. So we've got a major low and then it turns up, and it turns up strong enough to break all of the trend conditions that would signal a long trade. Okay, that's why I've got the long on those two bars right at the low. And then here I've got the short. Okay, that short is the first lower high or higher low signal. And in this case, it did actually find the lower high. So that's what the ones that you see that fail the most, as far as just looking at operative time frame charts, just all the minute charts. Every minute chart is classified as a potential operative time frame, and we're determining the operative time frame based on the number of bars from the start of the correction to the end of the correction. And that may take anywhere from 24 bars. Sometimes, I'm allowing 12 bars in here just to show you what that looks like. It's all very methodical and overkill, but see, I'm allowing between 2 and 14 bars. Okay, but that's only because in order to get the signal from this and it still show up as a potential short or a long, even though it's getting the signal from a 2 to 14 bar major swing, that 2 to 14 bar major swing may be occurring at the very end of the move, wherein the total number of bars for that correction could be upwards of 90, or let's say above 80 bars. But in order to still get the signal, I have to allow for those times when you get that final little strong pop right into the trade, which would be maybe not that one, but let me just see if I can find an obvious one here. Like right here. So imagine this. So this is, let's call this an expanded flat. So where does the corrective wave start? Where's the beginning of the correction? If this is an expanded flat, and that's A, and B, the C wave breaks the A wave high, and the B wave low breaks the preceding start of the corrective pattern. Okay, so A goes up, B comes down and breaks the preceding A wave low, the start of the A wave, let's say. And then the C wave goes up and breaks the A wave. In order for us to get this signal right here to account for expanded flats and sharp moves at the end of a correction, I have to build it as such. And in building it as such, it's going to find some signals that you would not really agree with. You wouldn't necessarily take or even think about taking at all. And that is the problem with coding a very specific pattern in using Bloodhound. So I'm doing pattern recognition within the confines of Bloodhound. Once we write all this out in code, it'll be so much more precise that yeah, it's just going to be ridiculous. We will have eliminated a lot of these smaller, kind of out in the middle of nowhere looking signals like these, where it's not really a corrective pattern per se. You could potentially call that an A, B, C, but I doubt very much that you had the confirming volume in there. You may have, I don't know. But you're already in a pretty strong downtrend. So taking all of that into account within various Bloodhound templates for various charts, accommodating, again, day trading, swing trading, Forex, stocks, futures, it's been quite a load of work. So you will see some signals that may not make any sense on some of these operative time frame charts. Like basically here, I'm showing that we have the potential for the end of a correction right there as it breaks that preceding low. It could be a tiny little ABC, right? And then once you break this low, then you have another one. But once it moves down too close to these lows and it breaks those trend thresholds, then it's no longer going to be allowed to be classified as a long, which was at this point right here. Okay, so how many bars does that make up? To the very last one, 112. I think the maximum is 120. Okay. But I cannot know for sure what is the starting point of the correction from within Bloodhound without adding a lot of really CPU intensive rules that would make it much more difficult to run multiple workspaces than it already is. So these workspaces are slimmed down. I've removed all of the extraneous indicators that were up here for doing any sort of troubleshooting of the signals, because it's really just overkill. Hardly anyone would ever use them anyway. It was more of a thing that I had on there for the development phase, and now that that's over and I can begin to write the specs for these, which I've already begun, in fact, quite a while ago. The work now is to convert this into a proper indicator-based signal, which is what we'll be doing. So that's why you can have a signal on the operative time frame chart from 3 different charts for the same trade. So, well, that's the question. That's the question, isn't it? So is this a setup on the 5-minute chart? Yes, it is. How many bars does that make up? 81. Is it a setup on the 2-minute chart? That's where it gets into a little bit of, I'd say, borderline, not really allowed, but yet still shows up right here. And why might that be? Well, it's because it's counting from this low. And you might say, well, that's 2 separate, let's say you wanted to call this a double 3. You could technically say, well, yeah, I can see how that could be. You might count from here. That would be all one correction to that high, 87 bars. And then from here, you have a separate leg, separate corrective move, and that's about 90 bars. And then I think it topped out there at 95. So if you're measuring all the way back to the actual low, well, then it would not be allowed because it's over 120, 130 bars. So this is one of those that still gets allowed through because it's already in such a strong downtrend from this point, and you've only retraced about 50% of that move. So, yep, it's still allowed to show up. And that I would bet at least 50 cents that the reason we're getting this is because that 2 to 14 bar solver, let's just see. I'll go 75 cents. No, and I was wrong. Okay, maybe it's this one. Nope. One thing that I have in here, though, and this is kind of iffy, but necessary to catch all the good signals, is I add in the next higher time frame up. So you see all of these solvers are groups of solvers. These are looking at not just the number of bars, but how fast the price action is moving up. It's basically the slope of the swing and percentage of the average range per bar. So how fast, at what grade is the market moving up? And if it's moving beyond 33% of the average range per bar, meaning more than, then it has to be a 24 to 56 bar correction. And then it can move up as fast as 49% of the average range per bar. And if it's faster than that, well, then it has to move up at less than 67% of the average range per bar. And at the very fastest, between 2 and 14 bars, it can go no faster than 82% of the average range per bar. These are looking at major swings only. Major swings only. Okay. All of this is in a document, and it's about as easy to understand as, learning Greek. But I think with a couple of extra videos, it'll begin to make sense, such that you can at least know and understand why it is that it's getting a signal, and then you can you can have a judgment call as to whether it's viable or makes sense to take that trade or not. Right? That's the idea. So I'm giving you tools to make it easier to learn the most complicated methodology that I've ever developed anyway. And people will hear that and they'll say, oh, but aren't you supposed to make it like KISS? Like keep it simple, stupid? I guess simple people can keep it simple. But we're competing against the greatest minds in the world that have access to technology that we'll never even know about. And you can keep it simple all you want. Keep it simple. But at least understand what it's going to take to make money against these people. Take money from these people. It's going to take a heck of a lot more than just some simple, stocks and commodities strategy of the month or whatever. It's all nonsense. This is not simple. In fact, it's quite difficult. And to find anything at all that's even remotely viable can be a lifelong project for many people. Fortunately, I've been able to fast track that by learning from the mistakes of others very, very, very quickly in the building and testing of those systems for those mostly men that I worked with, and some women. But we all have variations of the same theme because we all read the same books and the same magazines, and we want to believe that those people that are marketing to us are marketing something that's actual has some utility to it. And the fact is, most of them really only care about one thing, and that is moving money from your account into their account. And that's where I have failed as a businessman. I don't care about that. Couldn't care any less, to be honest with you. And it's cost me, but you know, so be it. I'm in it for the long haul. I'm not in it to make a quick buck and go buy my Lamborghini and see you later. You know, but whatever. So that's why you can get a short here after 280 bars, and then all of a sudden you get a long signal. But it's not a long signal, right? It's a potential area during which time for those bars, if you get those bars touching more than two areas in the market geometry, preferably on two or more charts, one sloping in favor of the trade, one sloping against the trade, and you get the volume and the momentum divergence confirmation, well, then you can get a signal. Okay, so that's why this. It's one of the ways in which this is confusing, and I know that quite well because it's sometimes confusing to me, and I made the dang thing. So, yeah. I'd love to spend more time going over more markets with you guys. Let's look at crude real fast and maybe a couple of charts in the NASI from my friend Mr. Rudd, and then we'll call it a day. And there was your short trade. See, amazing, just amazing. So yeah, I'm gonna leave this template and chart alone for now. I'm just creating more work for myself that prolongs the release, and I'm not going to do that to you guys anymore. I want to eliminate it because I want one less chart for you guys to have to manage, but I mean, come on. I talked about it. We waited for it. Almost quoted Hillary. Just, oof. Anyway, and it happened. And it happened beautifully. It may turn around and go right back up, but that's how this works, and that's why it works, and it wouldn't work without the volume, despite what, you know, I don't know why people have trouble with volume. Volume is what creates the price that we're looking at. It's the buying and selling of those contracts. And when the market makes a turn, it turns down or up out of that pivot from which it turns. There will typically, not always, but typically be some very, very solid evidence given to us via the volume analyst as to whether or not there was actually demand coming in at the support area at the low, or supply coming in, right, at the high, at the resistance area. And that's what we're looking for. We're looking for the areas which are pretty vivid when they come together. It's, I mean, to find them can be difficult once you get the hang of it, which is what Analysis Live is all about. And I think you'll see more and more of that as you get more and more examples from me in there, you know, on top of what Bo is doing. Granted, I have not been in there as I should have been because I've been, you know, quite struggling with many a many a predicament. But yeah, all that's come to a head now. I've got a beautiful computer. I think we have some financial backing that will make it to where we will never have to worry about TTP going away. And that should give you guys some solace and some comfort. And it will afford me the time that I need to devote to nothing but trading and analysis and making sure that you guys learn and understand these methods. So that is my number one goal moving forward. It's one thing to have all of this. It's quite another to actually use it effectively. Well, that's at the end, huh? It's quite another to learn how to begin to use it and then to measure your progress, which is where we want to get you. We want to get you to the point to where you can actually measure your progress and see that you are indeed improving. And if you don't know how to do that, it's difficult to make improvement. And that's what we want to focus on, is teaching you how to make that how to see that you are making those improvements. And the only way that you can do that is if you're measuring your results. You're keeping track of, comparing, contrasting, and measuring using statistical modeling. And that's something that we're going to be getting into directly. I don't know that we're going to go all that deep into it. We're going to touch on it near the end of the week. Position sizing and, what you can expect to occur given XYZ track record stats, and how just one minor fluctuation in one side or the other, one statistic versus another, can create dramatically different results. And I think that's going to be eye-opening for a lot of you. I said we'd go into some other markets, but frankly, it's 9:30. I need to eat, and I need to wrap up these installers so that you can actually use them in the morning. So let's call it quits. It's been 2.5 hours, whereas normally it would be 4.5 hours. So it's progress. Not really, but it could be considered progress by the very, very optimistic, by the glass half full people, which I love dearly. Good night, then, sir. Thank you. Thank you for not thrashing me and bashing me and cracking the old skull. I guess y'all know where I live, though, so. Oof. Well, let me hurry up and get these installers out then. All right. You guys take care. Have a good night. Hopefully, hopefully you learn a little bit here tonight. And I want every day this week to be at least as meaningful. Maybe I threw too much at you all at once. I'm sure I did. I tend to do that. But tomorrow's another day. So I'm going to spend the first hour of the morning with Bo, and then the next 2 hours with you guys. And then I'll continue on with the analysis for a little bit as we begin to set up this new tech I've been working on. So, all right, I'll talk to y'all in the morning. You guys, that's what I'm focusing on. Bo has been wanting to do it, and I didn't want him to have to worry about that doing the Elliott wave. It's a difficult thing to get right, and I just didn't want, until I'm able to work one-on-one with him, I didn't want him to have to think twice about, is this the right count? Would Daniel agree with this? When I just simply wasn't available for him to ask. So now that we're going to be working together, Elliott Wave is going to be a major part of what I'll be exporting for sure. So, and it is looking as though it were failing here. So I'm not too sure what'll happen next. To be quite honest with you, I don't think it's going to break that high. I think it's just getting a little retracement right now, but it's a tough one. It's pulling up out of an area that could easily be that fourth wave low. It just does not trace out a channel. At best, it traces to the midline, and that's it. I suppose if I were to use that lowest closing price on the hourly, it hits the midline perfectly. Yes, it does. Yes, it does. What if I do this? Yeah, that's a hit of that midline. Sometimes that's all you get. The midline, especially in a really nasty sideways movement with a really sharp initial push down. And then if it's a triangle, well, the triangle usually doesn't have a very deep retracement, so the channel that you would draw from high to triangle high ends up being way too steep to make it to the bottom of, and you end up using the midline as support in this case because we're going into a low instead of the bottom of the channel, because the bottom of the channel is just simply way too far away. It's way down here. Now, if we do end up making it down there, this will have been a 1, 2, 1, 2. And then we'll do our big third of a third in the overnight gap through all this. And then our target will surely be, goodness gracious, surely be the bottom of that channel. Got like 3 languages flying around in there and none of them make any sense. All right, you guys have a good night. I'll talk to you in the morning. Y'all have the link, huh? Just post it one more time. I emailed it out too, but good boy, Charlie. Where are you? Yep, this is it. All right, that's the link one more time. And I'm going to get Cedric to edit this in about 5 hours and then put it up on the old YouTube, the place where smart people go to get banned. Anyway. All right. You guys have a good one. Talk to you in the morning. Bye, everyone. Cheers. Cheers, matey. All right.